Hello class, how are you? In this video, we start to switch from talking about income statement to a new statement, which is statements of cash flows. Statement of cash flows is also a very important financial statement. And if we look at the statement of cash flows in our course roadmap, it is right here, where it is a very important form of how the information is disclosed. We talked about balance sheet last week. We just talked about income statement, and cash flow statement is relative to income statement, very similar to income statement, but focus on the cash part. So it provides relevant information about the cash receipts and cash payments of the business during a period. So if we talk about income statement as an accrual-based accounting, statement of cash flows is then focused on the cash part. So it is cash basis. This is Coca-Cola company's cash flow statements. I think we are all very familiar with the three activities of cash flow statements. Number one, we have this net cash provided by operating activities, right? So from here, this is operating. And then the second part is investing activities. Lastly is the financing activities. Financing means, how the money, the capital is obtained. So I would always want to remember operating activities as something that does not relate to investing or financing, because the latter two are much more direct to remember. So operating activities, its definition says it includes everyday business activities with the customers, suppliers, and employees. So it's like everything, every day you are dealing with, the operating activities. And it primarily relates to current assets and current liability. So remember, all the cash flows, right? You have the cash inflows and outflows. If we are gonna do journal entries on these cash outflow inflows, mostly it relates to the current assets like accounts receivable, right? Or inventory, or current liabilities, which is, tax payable, right? Note payable. When you pay back your notes, right, you reduce your liability, but then you also have a cash outflows. So these are the most two types. And these, what we are talking about, paying back notes, paying back, your suppliers. These are operating activities. Investing activities include inflows, outflows related to companies' long-term assets. So it is the long-term assets. What are in long-term assets? Property, plant, and equipment. Intangible assets include trademarks, right? Goodwill. All these are investing activities. Financing activities include obtaining the capital needed to launch or keep the business operating from creditors and shareholders. So if you look at these activities and the related accounts and balance sheet, it relates to long-term liabilities. Loan, right? Those long-term loan, debt, and owner's equity, which is, the last part of accounting equation, common stocks, preferred stocks, of course, or dividends. So let's talk about, the category and the examples. First is the operating activities. Now, the way a cash flow statement structured is to really compare cash flow to income statements, so that investors are presented two relevant sets of information, and they will have a better understanding of how the business is going. So the operating activities part of cash flows really is presented to kind of mirror the income statement. So you will find very similar accounts or transactions in the cash flow statements on the operating part to the income statement. Why do I say that? Like, for example, in the cash inflow, the left one, the first one is collection from customers. So when we collect cash from the customers, right, that is an operating activities. What is the related account or items in income statement that's also related to customers? It is the first one, it is the revenue. We just learned income statements, right? Revenue is the first line, and it is also refers to the amount that our customers, pay us or own us, or related amount to the customers. This is the one from income statement related to the collections from customers. Second, receipts of interest and dividends on investments. Now, we've seen it in Coca-Cola a lot, right? And it is called income statements. Interest income. And we also have something called dividend income in the income statements. Right, these two are related to, the operating activities of cash flows. Sort of, if you look at this line, you will go check it out for the income statement line, and you'll see the difference of the cash basis versus accrual basis accounting. Now, to the right-hand side, which is the cash outflows, payments to suppliers. What is it in the income statement that's related to suppliers? COGS, right? Cost of goods sold. Payments to employees. Well, that's the employee's salary expense. Payments of interest and tax. In income statement, we do have interest expense, and we have income tax expense. Income tax expense in income statement. You can find these items in income statement. So really, the operating activities, if you look at the cash flow statement, the first part, you can literally check this part with the income statement, and you can compare line by line. So this is also another presentation of the, everyday business. Now, the second one is for investing activities, right? The second activity in cash flow statements. In the cash inflows, we have sale of planned assets. So when you have inflows, that means you collect money. So in exchange, you lose some of your long-term assets. So this is the tangible one, planned assets. And the second one is intangible assets, including, for example, you sell your trademark to another company, right? Or you sell your patent to another company. That is, a cash inflow, but you also lose your intangible assets. Also selling some investments. So if you have 5% shares of another company, and then you're gonna sell it. So this sale, the proceeds is cash inflows in investing activities. The inflows part of investing activities is more about, acquiring these long-term assets, or, purchasing the new investments of another company. So, in exchange, you need to pay cash, right? Lastly, we have the financing activities. Financing relates to long-term liabilities and common stock equity, shareholders' equities. So issuing stocks, treasury stocks, these are stockholders' equity. If you issue, then you have cash in exchange. Also borrowing money, which affects your long-term liabilities in the balance sheet. Now, for financing activities, cash outflows is sort of like related. Some of you may ask me, so you have a payment of dividends as the financing activities, but upfront here, you also have a dividends. Why is it the case that receiving dividends, you can treat it as an operating activities, but paying dividends is a financing activities? It's so confusing. Well, let me tell you this. Again, when we talk about operating activities of cash flows, we said that every line items in this part can find a relating part in income statements. Do you see when we pay dividends? Do you see income statement have dividends there? No, it's not. We only have a dividend income. There's no paying out dividends. That is an income statement. And again, I've talked about this in the very first, that dividends is not part of the expense. So when you do net income equals revenue minus expense, dividends will not show up there in the calculation of net income. So paying out dividends, because it does not show up in income statement, it's also not part of the operating activities in the cash flow statements. Now, some of the important things I sum up here, right? Cash received of interest and dividends are operating. When you pay interest, it's also operating. But when you pay dividends, it's financing. Again, that's because not in income statements. Now, we have the US GAAP, which is one set of rule, and the other set in the international setting is called International Financial Reporting Standards, or IFRS. All the European countries, Canada, the Australian, a lot of Asian countries are using IFRS. They have a different set of rules, and there's a little bit difference in terms of the classification of these cash flow statements. The biggest difference is actually on the presentation of interests and dividends. So in the IFRS, they are not focusing on, matching the operating activities and income statement. So they put interest paid as an financing outflow, and dividend interest received is operating, but dividends pay and interest pay, right, as long as it's the pay one, is always financing. This is useful if you are taking the CPA exam, but since we are focusing on, our course is focusing on the US GAAP, US way of doing it, we are going to focus on, treating interest paid as activities of operating. Now, 3 review questions. You can pause here. Well, this question asks which of the following items would not be included as a cash flow from operating activities? The answer is B. Machinery once purchased is gonna be a long-term assets, and long-term assets purchase is usually investing activities. The second question, Robinson Corp reported net income of $20 million in 2018. There's no new investment, but it sold a machine for $30 million. Its book value, the machine's book value, was $10 million. The investing cash flow was. You can pause here and think about it. The answer is $30 million. A. Well, simply we look at the cash, right? We don't care about the cost, because the book value, I don't even know when you pay the $10 million. It may be more than 10 years ago. For cash flow statements, we only focus on this year's cash changes. In this year, in the investing activity, there's only $30 million change. So I'm gonna classify the $30 million in 2018 as my investing cash flows. Last question. Robinson Corp purchased a new building in exchange of shares of its own stock. This transaction will, you can pause here and think about it. The answer is E. Well, because the transaction just has no cash involved, right? You have a new building. In exchange, you issue more shares. Where is cash? No cash. So again, cash flow statement, you have to have cash involved. So there's going to be no effects on the cash flow statements. Now that's it for this video. In the next video, we're going to talk about the operating activities, two methods, direct and indirect methods to come up with the numbers. I'll see you in the next video.